Where are you based out of, Doug?
I am in Northern Virginia, right outside Washington, D.C.
Okay, cool. Coming from Arizona today, and I think we have one more panelist coming in from Texas. And
You're in Arizona?
Yeah.
You're in Arizona?
Yeah, I'm in Scottsdale.
Oh, great place.
Yeah, it's fun.
One of my favorite bars in Scottsdale, the Pink Pony.
The Pink Pony.
That's where all the baseball players hang out during spring training. It's quite a wild place.
Oh, really? Yeah. That's funny.
Yeah.
Memorable name, I guess.
You haven't been there?
Nope, never been to the Pink Pony.
All right, there you go. That's your mission today. And in the future, I am your source for dive bars in pretty much any city you go to. I could be your go-to guy because I know them all.
That's funny. Yeah, well, I guess that's one takeaway from the panel already. It's the Pink Pony. So
there you go.
My money's worth.
I close my windows, but there's helicopters hovering over Beverly Hills, and you just can't get rid of them. So is my background okay now?
Yeah, that's fine.
Okay.
Yeah.
Hi, Richard. How are you?
Hey, Carl. Good. How are you?
Yeah, good. Hi, Doug. Hi, Natalie. Natalia.
Hi, Natalia. Yeah.
Pleasure.
Great. We're just waiting for one more panelist. We've got 5 minutes, so if anyone needs a glass of water or take care of anything, feel free just to put yourself on mute, or you can even turn off your video for a couple minutes if you need to kill off an email or something. It's no problem.
Doug and Natalia, where are you guys?
I'm in Beverly Hills, LA.
I am in Northern Virginia, right outside Washington, D.C.
Nice. I went to Maryland, so I know it well.
Oh yeah, that's right around the corner.
Yep. How about you, Carl?
I'm in Park City right now.
Nice.
Yeah. I'm in Park City, but I live in Los Angeles.
So we're neighbors.
Yeah, I live border of Beverly Hills and Century City.
Sure, so you're right by me. Yeah.
I live in 10,000 Santa Monica Boulevard.
Hi.
All right, let me get some water. That's a good idea.
Mm-hmm.
Natalie, what do you do?
I'm a second generation family office from oil and gas family, but I kind of separated out and I've been working more on technology, e-commerce, healthcare, and lately into gaming world. How about you?
We invest exclusively in military guys, early stage startups.
Like, give me an example.
So we have a company that's not too far from where you guys are, in Marina Del Rey, called LeaseLock. They do they replace security deposits for people trying to lease an apartment. But we're all about the entrepreneur. We're not in one segment at all. We're all about our jockeys, not about the horses so much. We're mostly all military guys, so we're not the smartest guys around, but we stick to what we know.
Well, actually, probably I want to discuss but my friend's project that is super interesting offline with you.
Oh, хорошо. Ви какой дурак, и вы говорите по-русски. Правда?
Да, конечно.
Happy to do it.
Yeah.
So where are you from? Where are you from in Russia?
Moscow.
Moscow. Oh, I spent some time there.
Same.
Yeah.
I remember being in the long line, just to show you how old I am. I remember being in the long line of the first McDonald's when it opened up there. There was a line of 5 miles long, and it was just unbelievable what exciting time that was.
I was there. I was a teenager.
it's really something, it's,
Yeah.
yeah, good times.
Mm-hmm.
Yeah, I have stories about Moscow. We could go on and on about that.
Cool. What took you there?
So as in the Army, I was what's called a foreign area officer, where I specialized in Russia. So had a lot of knowledge. I learned Russian and went to school for basic Russian history and all that. And the idea is that we never know what we're going to end up doing. So you needed subject matter experts in that area. So we spent a lot of time in the country. I went all the way from Lake Baikal to all over the place, just running around, talking to people, learning the culture, learning stuff. And
That's fascinating.
yeah, it was a lot of fun. It was a lot of fun.
I love that.
Yeah.
Great. All right. We'll get started in just about 30 seconds here. Thanks for everybody joining us live. Throughout the panel, we'll be looking for questions from the participants, so feel free to submit those at any time. Welcome, everybody. My name is Richard C. Wilson, founder of the Family Office Club. And today we're doing an investor discussion panel on creative investment structures, royalties, co-GP, seed, anchor investing, JV, and other innovative approaches to closing better deals. We have a few panelists with us here today that's going to be sharing some of their experiences and perspectives. And we'd like to just do a quick 1 or 2 minute introduction from each of the panelists. And maybe Natalia, if you want to start us out, and then we can have Doug go after you.
Yeah, thanks so much. Thanks for having me here. So I'm a second generation family office. My family is from Russia, but everybody's based in Europe, Switzerland, and Germany at the time. Traditionally construction, big project developments, and in the last 10 years, oil and gas. I've decided to venture out of the traditional way, and I've been spending more time on technology, different interesting technologies, new technologies, e-commerce, medical remote monitoring. The last 4 years more in a gaming space. Gaming meaning online gaming, video gaming.
Great. That's great. And Doug, what about yourself?
So my name is Doug Doan. I run a small investment fund called Hivers and Strivers, and we're very weird. We invest exclusively, no exceptions, in early stage startups led by military vets, and particularly graduates of the U.S. Service Academies, West Point, Annapolis, Air Force Academy, Coast Guard. We're all about the jockey, not about the horse. So we're in all kinds of different segments. We really don't care. We really care a lot and exclusively on the leadership skills of our entrepreneurs. So we're almost always the first money into an early stage company. And we're big believers in that our military guys are an underappreciated asset.
Right, I definitely agree. I know a few investment firms ran by veterans who are doing an excellent job operationally. And through one of our clients just signed an LOI with one that is ran by a vet, and the only hires military veterans. So we should connect you to them, plus the other group I know within the Family Office Club.
Happy to do it. Thank you.
Great. Yeah, sure. Carl?
Yeah, thanks, Richard. My name is Carl Coward. I run Focus Capital Partners out of Los Angeles, currently in Park City, which is different. We are an investment firm focused on early to mid-stage companies. Typically, the companies need to have a social impact aspect of in their sort of business plan. We have a very broad view on that. My broad view on that is that they need to do something better for the world. I come from my background is actually in resources, oil and gas, but since 2014, having set up Focus, we really wanted to focus on opportunities outside of oil and gas and mining. We've deployed about 110 million over the last 6 years into the water sector, waste sector, food sector, especially materials, and the cannabis sector. And recently we've invested into the education space, K-12.
Great. Thanks for joining us today. Bharat?
Hey, good morning, good afternoon, depending upon where you are. I represent Anchor Enterprise and our family office. We own and manage about $1.2 billion worth of real estate assets and own some of it 100% and some syndicated. On the real estate side, we acquire multifamily, hospitality, and we were in office and retail space, but we divested about $600 million worth of stuff before the end of February. So we were fairly lucky that way, and we're sitting on a pile of cash. So on the family office side, we are a private equity firm for good businesses that has potential of making a great cash flow as well as great IRR at exit. And we also fund their negative operating expenses while they're growing, which is very unique in this space.
Sure. And you're humble enough to say you were lucky because I guess no one predicted COVID would do what it did, but I know you exited most of your assets in 2007 before that crash as well. So I don't know if it was all luck. Everyone knew we were late in the cycle at least, right? So David, you want to unmute yourself and introduce yourself next?
Sure, thank you. My name is David Beatty. I'm a co-founder of Angels, and we co-invest with venture capital firms into later stage venture capital opportunities. We're a syndicate, so we're actually not a fund. So we have 600 members, including family offices, mostly in the United States, but also around the world. And really, we look to invest in companies that embrace LGBT leadership. And so we are a mission-driven organization, but we're very much about making money and using our network to actually get access into these later stage venture capital deals, which are typically oversubscribed. And so a typical story is one of our members knows somebody who's on the leadership team of a company that is doing a Series B or a Series C round, and we'll get an allocation into that, and then we share that allocation with our members. To date, we have invested $70 million. We expect to close this year with about $100 million that our members will have co-invested with us into these opportunities.
Great, great, congrats. Glad to have you here again. I remember you were on one of our panels maybe at the very start of the COVID pandemic, I think it was. So I think on this next question, with all these questions, we want to have relatively short answers and keep things moving fast with this many panelists on here. The first question is about the absolute number one best type of investment that you could move forward the fastest with right now. Because all of you hinted at and mentioned a scope of what you focus on, like Doug, in your case, on veteran ran firms, and you're betting on the jockey. But even though that's the case, what can you move the fastest on? Is it a veteran ran firm, but they happen to be in your state, so you can move forward faster, or they have some certain type of track record, etc. And like for Carl, for example, he brought up many areas of investment, but he mentioned education at the end. So is education the type of deal you can move forward with the fastest right now with high conviction? And maybe just like in a sentence or two at most, we can just go through each person again on the number one type of deal flow that you're looking for. Because we have people watching here live, and we'll have a couple hundred people stream this over the next couple of weeks, and they want to kind of go direct to the people who are the best fit with what they represent in the market. So Doug, do you want to go first and just as specifically as possible describe what your highest conviction on and can move the fastest on?
So we move pretty fast on everything. The process is the due diligence, and because within the military world, we're like people that have been living in the Appalachian Mountains and marrying our cousins for 15 generations. Everybody knows everybody. So it takes us we do due diligence on the person, not the early stage companies. There's not a lot there to do due diligence because they usually haven't been in business for that long. But you can, and we do, extensive due diligence on the person. So we find buddies that have served with that young man or woman, and we go to ground on it very, very quickly. So everything moves fast or it doesn't. So we're not there's not different buckets of what moves faster than something else.
Okay, sure. Sounds good. Natalia?
So I think the fastest is because right now one of the focus of the platform we're building is focusing on providing help to lifestyle and culture and wellness of gaming market, because health and wellness are not addressed, providing the opportunity to find jobs, job searches. So anything that actually can help build and expand the platform that with wellness, health, technologies that we can bring into immediate portfolio. The other things, you know, as far as the e-commerce, telemedicine, we'll look at it, but they'll probably take a little bit longer at this time.
Right. Okay, great. Carl?
Yeah, I mean, bizarrely enough, we're going a little bit back to our history in resources in particular, and we're actively looking for North American resources opportunities in gold, nickel, copper. We're happy to be early stage investors. We're very comfortable with early stage risk. And we're also actively looking for technologies in the K-12 space.
Right. Okay, great. Bharat?
For real estate, it has to be deeply discounted. So if anything that is deeply discounted, we are here for you. On the non-real estate side, on the private equity side, Richard, you've been very great to me and has brought a lot of deals, and we've invested in few of deals that you brought to us. So we are committed to invest $200 million in the Veterans Administration deal, where the government is your tenant. So, and it's guaranteed non-cancelable leases. I'll do those business any day. And then you also brought the mineral rights business where you don't have any operating expense. And gas being at the lowest and the oil being at the lowest, you're entering at the very low valuation, and only thing it can go is upside. So any business on a private equity side that either is a cash flow or is a great upside, we are there for that. We are also looking at, and that also, I think you brought that deal to me, is the energy credit deal. And we signed the LOI, and we probably are going to save hopefully $100 million of tax exposure to our investors because of all the tax credits that will be generated through those things. So we really need to think differently in this environment and not stay with the classic way of investments. So these are the different ways we have figured out how to maneuver this space and this time.
Sure. No, I appreciate that. And for panelists listening, I want to point out a couple of things. Each of the deals Bharat mentioned, we brought to him because of out of thousands of things we see, they seemed unique, they seemed credible. We had known the team, at least on some level, underneath the deal, but also we got to meet Bharat through Family Office Club 7 or 8 years ago and kept in touch and developed that relationship. And so, you know, we're motivated to do these discussion panels so I learn more, so the panelists meet each other, access deal flow, get a little bit smarter access to each other as well. And that's my motivation to run the Family Office Club, is to get real business done and create a real club type atmosphere community. Just like you do at Gangels, David, you know, like the community thinking and sourcing is part of the benefit. So why don't you go, David, next on what you guys can move the fastest on?
We move quickly on everything. We have to move quickly on everything because we are co-investing with top-tier venture capital firms like Andreessen or Founders Fund or Sequoia or Insight. Those are the kind of investment opportunities we co-invest in. And the reason we get into them is because of our network and because of our reputation in supporting companies with diversity and inclusion. And it never ceases to amaze me how many companies want us on the cap table because we can bring them a network of organizations and people who can help them with recruitment, with bringing in independent board members, and just whatever they do with diversity and inclusion. And so we rely very heavily on the lead venture capital firm that they, you know, if they're investing $30 million in a company, our presumption is they've done great due diligence on this company already. So we will, of course, do a legal review of the documents. We'll use our network to do a legal review, to do a check on the people we know in the company, but we very much heavily rely on the lead investor for their due diligence and co-invest with them. And we'll generally close all our deals within 2 weeks.
Wow. Okay. That is fast. Doug, when you say that you move fast, does that mean, you have an LOI in place 4 to 5 weeks out and you can close in 2 months? Or what does fast mean for you? Because for some people, 2 months is fast because they usually take 4 to 9 months.
So it takes us really no more than 30 days to put something in place. Our best now, we have a portfolio of 12 companies that are very active, and almost all of our good deals either come from a referral from one of our existing portfolio companies or from one of our LPs. So they've sort of been screened at least and recommended to us. So it doesn't take much time at all if everything is in place. Now, it's a different story if the company has problems and it has to sort through some of the issues. We'll stick with our companies, right? They may have to buy out a former founder that is no longer with the company, or the founding team broke up. So we'll work with you to work with our companies to break that up. But the timing is just not the issue for us.
Right. Makes sense. Okay. So one thing I want to prevent is some people watch a lot of these panels, and a lot of times people say, team is the most important. They say you have to do your own due diligence, not follow the herd. They say you have to buy at a good price, not overpay. And, people who really follow our stuff closely, the stuff that's said multiple times is because it's critical and foundational and it's very important. So it has to be mentioned, or you're not doing service to the people who haven't watched 50 of our panels. But how do we focus right now on something that maybe people have not heard at any investment event before, or conference or virtual webinar, on maybe a unique structure you've used, a creative way to negotiate a deal, maybe a deal that was going south and you saved the deal by bringing a unique perspective to the deal, or a unique structure or fee alignment. We don't have to have everybody answer this question, but I'm just hoping that maybe 1 or 2 of you have an example or a case study of that, just to kind of switch things up for those watching.
So if I can go first, as you know, we are very unique because we also fund the operator's negative cash flow of an operating company. And that is very, very important for them. And when we offer that, we eliminate most of our competition because we get the best deal, for lack of a better word, because nobody else was going to fund their operating cash negative. So that is a very unique thing that we have come up this time. I also believe that our co-GP structure that we have now implemented is also working very, very nicely, because now we are getting into companies which has 15, 20 years worth of experiences, and they're now looking for equity or investment dollars, and we bring those dollars in. So we just got 15 years worth of experience in day one. And then we still share 50-50 of the profits, and they don't have any problems because we bring 95 to 100% of the equity. So I think those are the few things that we have done has made the biggest difference.
Sure. Appreciate you sharing that. Doug, you look like you maybe had an example.
Yeah, this is a little bit different than probably what you were expecting, but I think there's a great investment has a halo effect, meaning what is the impact of this bringing this company into our portfolio on our other portfolio companies? And if we get it right, we bring an entrepreneur that adds value to the rest of our entrepreneurs, just as I think that some of the larger investors that put a little bit of investment in our fund, we add to the rest of their portfolio because we're just weird enough to bring value to all of it. A good example for us on a small end is when we invested in this young woman, West Point grad, combat vet from Afghanistan that did route reconnaissance. Now, you're just not going to push that girl around. And when she came into our portfolio, she raised the bar on everybody. And I could just see the rest of our entrepreneurs just kind of picked up the pace because she was just a wonderful inclusion. And I think that a good investment will bring value to your other investments too.
Yeah,
Right.
I can actually second on that. When we invest in early stage startups, that obviously they don't want to give up too much equity. So the way we do it is, we also look how impact it will give on the overall portfolio and a specific project. But also, rather than taking a larger equity stakes, we always take percentage of future cash flows. They love that idea, and we help them to get to that point. So it becomes a win-win for everybody.
Right. Yeah, makes sense. We had a deal recently that was about to not work out. We've been negotiating it for a long time, over a decade, and then they said, "No, let's stop talking to each other. This deal's not going to happen." Kind of like nicely told me to go away, and I came back to them the next day, offering them a structure where they keep 10% of the asset instead of me buying 100%. They keep 10, I get 90%. And so they don't have to trust me in knowing that I'll produce a profit or not. I also gave them a small gross revenue royalty off of that asset. So as long as any revenue came in, they were going to get a wire transfer every quarter. And that brought them back to the table and was able to save the deal. So that's an example of a structure that we've used one time. I don't know, Carl or David, I can move on to the next question unless one of you had an example of a creative structure or approach.
No, I mean, I'm going to come at this a bit more negatively. I think right now, getting deals done with people you don't know is becoming quite challenging. I mean, I think we are all going back to the well, to people we've dealt with before, worked with before, invested with before. That goes for co-investors or operators. And the reason we're all here on a panel on computer versus in person is COVID, right? And I think COVID is going to be around for a long time. So I think it's going to be a challenge to see how long we're going to be able to continue doing deals with our network and sort of not go beyond that network. So I think sort of forums like this is very useful because it helps with connection. And that's what we're looking for, right? Because it's deal flow becomes a lot harder when we can't meet someone in person. Certainly my business partner and I are very focused on meeting the teams, being with them, breaking bread to really know if these are people we want to be with long term. And that's tough to do now.
Yeah, I think before people would start with an email, if that went well, maybe a short phone call, not even a Zoom. And then when possible, maybe a more detailed email and then maybe a meet in person. Now it seems like the meeting in person gets delayed until after the LOI maybe is even signed. And maybe before the wire transfer goes out, you fly the one time to Nashville to actually meet the human being from 10 feet away with a mask on if you have to. But it seems like the meeting in person is pushed way back if it happens at all. But it definitely helps if you have a point in common, even if they're not currently in your network. At least if it, at least if nothing else, say, hey, yeah, they've been in the family office club for 2 years. I've met him in person 3 times. From what I know, he seems like a good person, and this is what he's always been doing. So I think that can definitely help. David, were you going to make a comment before I move on?
But for us, it's really the power of our network, and that everybody knows somebody. It's a bit like Doug's network in the military. I used to joke and now say quite seriously that I am now 1 degree of separation from every homosexual in the United States, and you can laugh at that. I do, but it's quite a powerful network, and that's how we. That's how we help our members, and we have straight allies who are members and everything. It's people who embrace diversity and inclusion and LGBT leadership, and that's the power of what we do, and it's how we actually get into these oversubscribed deals that have typically just been institutions that have been able to get into it, and we're enabling individuals and small family offices to get into these deals that previously have just not been available to them.
Right. Yeah, and I love that we're doing a live workshop in 13 days, I think it is, and it's going to be a 4.5-hour workshop on investor relations for our members. And we teach that you should define a niche, a sandbox that you want to dominate long-term and be known for. So deals come to you first. People know who to go to with what type of deal. And very clearly with Doug and you, David, I see exactly what you're doing. And I don't know anyone else on planet Earth that's doing what you're doing. And you have credible traction. And I think when you have those things combined, I hope you guys don't mind me mentioning your names as examples at that workshop, because some people here watching live or streaming this will also be on the workshop. And I want them to know, hey, I'm not making this stuff up. This is stuff that's actually working for some people out there. Different ways of getting it done, but it's very niche focused, but a unique strategy. I think that's what people are looking for when they're watching these discussion panels, is how to how to get new strategies, but also make new connections. And Bharat, I guess with your group pulling the trigger on relatively large deals, how have you been navigating that via COVID? Like, how many in-person meetings are you doing on a weekly basis versus, I mean, I know you're doing much less than before, but how many in-person meetings are you doing to get all these deals done?
So we are still doing face-to-face meetings, but just like you said, we would not do a meeting unless we have an LOI either signed or at least a couple of drafts been exchanged, because we don't want to waste everybody's time and travel all those places. So we still believe, I'm an old-fashioned and old-time believer of doing business. To me, shaking hands and looking in people's eyes is a lot more than the paper we sign our John Hancock on, right? So I still don't feel good just not meeting the guy and doing all those things. So we still follow that, but having the transportation facilities, etc., also helps.
Right. David, do you have an example of how you structure your common deals? You said you operate a syndicate. Do you put together an SPV on each deal? Do you do a single asset fund for each deal, or what's the technical way that you're kind of structuring that and getting that done?
For the vast majority of our deals, they are special purpose vehicles, single entity LLCs. Our members subscribe to join that LLC. Our minimum investment is $5,000, and if you're under 40, there's no minimum investment, because we're very keen to encourage the next generation into this asset class. We have our members invest between $5,000 right the way up to over $1 million in some deals. The vast majority of the investments are $5,000 to $25,000, because we preach diversity. And if you've got $1 million to invest in this asset class, we'd say you want to be investing in 50 to 100 companies as opposed to 1 or 2 companies.
Right.
And so we put together a special purpose LLC, and that enables us to get into these deals, because we come in and we look like a venture capital fund, even though we might have 50 or 70 members in the SPV who are investing. And then we manage that SPV on behalf of the members.
Sure. So I want to talk about that for 1 second. I'm just curious. So if the minimum is $5,000 for most investors, are you finding investors worth $5 or $10 or $20 million just putting $5,000 in one of your deals just to get to know you as a form of due diligence almost, and just see how they get treated and see how you think and see how that deal goes? Or
Absolutely. Absolutely. That is 95% of the time is what people come in, and they'll do a few deals at $5,000, and then all of a sudden, wow, where did that check come from? But yeah, it's all about getting to know us. But the other thing is, we actually run member managed LLCs. So we're really transparent. So we publish, if you come into one of our LLCs, you get to see the name of every other member of that LLC. And, most people know somebody else. And so they all talk to each other about us all the time, about how they get treated. So we're much more like an angel group in that regard. In this, if you think about a typical angel group, it's a club, it's a social club where everybody gets to know each other. We really operate much more like that, although we are seen to the companies we invest in as a more like a venture capital firm or a venture capital fund. We actually operate much more like an angel group.
Right. No, that's great. I think a lot of people who hear anyone having a minimum of 25,000 or 50,000 or lower think, oh, what a nightmare. They must have 4,000 investors and a lot of people bothering them. But I've just seen that investors who could write a $500,000 or $1 million check, they might spend $3,000 to $5,000, $7,000 doing due diligence on someone. If they could spend 3,000 plus invest 10,000 and just kind of get there faster and have more conviction, it's an interesting approach. I appreciate you kind of explaining that and bringing that up. And for Carl and Natalia, how are you finding trusted networks to source your deals from right now with less travel? And from that perspective, what suggestions would you have for Family Office Club members who want to access investors of your nature, like a private investor, a second generation family office? Who are you trusting to go through right now? Like, what types of groups, and where should our members be spending their time if they want to meet 30 different investors that are like you too? If you want to go first, Natalia.
Sure. I think the families have their own established network. An organization like yourself are very trusted, and we can always turn to you. And there's, Share Nat platform. I don't know if you're familiar with that. It's just for the family offices that list certain deals there. But a lot of it is just the people who already done deal wills, internal networks, the connection through our personals. LinkedIn people approach not as much because you need to vet them unless they come from somebody you trust. Usually they just go, like without being noticed. But I think the value that you provide is absolutely great for family offices, especially where we're right now.
Sure, sure. Carl, what about yourself? I mean, it'd be polite of you to agree with her, I guess, but what else besides coming on this panel, I guess, have you been doing to get great deal flow?
Unfortunately, yes, I agree, but it's really referrals from our co-investors and from companies that we worked with in the past. And, we've been around now for 6 years and, shaken a lot of hands and met a lot of people. And until very recently, I particularly spent an enormous amount of time traveling. I'm sort of with Bharat. I have a very traditional view on meeting people and doing business. It has to be in person. I have to get to know them. I have to break bread with them. We've been, we've had good deals and bad deals and made some bad decisions, but it's always been based on people, right? So we're super sensitive to dealing with only people that we have some good feel for. We are referred to us by people we really know and dealt with before. That makes it tough to get to us, but we are in a unique position where we invest $1 to $20 million early stage. So we have we service a market that not many people look at, and none of the institutions really look at. And so I guess to get to us, you just have to be through people that we know. That's just how it is.
Right, for sure. So, Bharat, I think a lot of people aren't sure how co-GP investments really work. Do you have an example of the structure that's been working well for you lately, just to see if anyone listening, would want to be part of a co-GP investment like that, but also just to show people what a co-GP investment can look like?
That's a very good question. In a traditional world of LPGP investment, either you are a limited partner or you're a general partner. And the general partner does all the work and gets a promote. And the limited partner gets predefined returns in the waterfall structure. The co-GP structure is slightly different. The biggest problem a lot of sponsors have is raising money. If I go around and talk to people, what is the most difficult task? Raising money is probably the most difficult task. So when people like us who come and we say, we will bring 95 to 100% of your entire project cost, and also we'll also fund your negative cash flow of operations. I mean, it's just, you feel like you died and went to heaven, right? And we say, okay, for doing that, what we would like, we not only would like the LP return, but whatever your promote is, let's say you're going to make $100 promote, we will share 50-50 with you. And that's a good trade-off. People have really loved it. And what we also do, so that's one. And second thing we also do, we allow them to charge 2% asset management fee. That means every dollar that is gone into the project, 2% of it goes to them every year that we don't participate. It goes for the management expenses. And if there is any profit, then only we participate 50-50. If there is negative, then we fund 100% of the negative. So that's how our co-GP structure works. We don't know many people doing this, but so far it has been greatly received.
That's great. That's great. Thank you, Bharat. Doug, I had a question from someone about whether you would work with military veterans who run an investment firm, and maybe they're either raising capital for their investment firm at the equity level, or would you guys be open to supporting them in some way if you did the due diligence and you vetted them and you really liked who they were, or do you only go to operating companies and you really don't want to be considering investments into an investment firm ran by?
No, we would. Absolutely, we would. So we're all about the veteran experience. Our preference is for operating companies because we put a guy on the board and we really work it hard. But we're open to anything that, if the leadership is right, we'll be there.
Okay, great. And we're going to go through some participant questions. Feel free to submit more. I see 3 more here. And then after this,
can I jump in there?
Go ahead.
Sorry, just on that, I think that's a really important thing. What Doug and Bharat is saying is, and it's how you're empowering your community, and the way we empower our community in a similar type of co-GP structure. It's really, we call it co-syndicators, because if you think about it, there's lots of people out there who have these small networks, but very strong networks, and how can we empower them to actually do deals themselves? And so we do this frequently, where we co-syndicate and effectively co-GP with our members who bring us great deals. They bring us some of their members, we bring them to our entire membership, and we're able to actually work together to put together a much more powerful offer to the issuing company and give the issuing company a much better experience, a much stronger investor base from our co-GP effectively syndicated investment. So I think it's a great point. What Doug is saying is that I so share what you're saying is, how can we empower our community to actually be better?
Right. I agree. We recently acquired commercialrealestate.com, and in thinking how we're going to build out the podcast for that, I thought, what's going to keep my interest? Because I've been doing this for 13 years, a lot of videos, a lot of panels, and we realized that our most qualified clients are always worried about being smarter on taxation. So to your point, David, if we can do 100 interviews with tax experts on commercial real estate, then I'll be a relative expert compared to my investors, and you'll be adding value, and then our deals will be structured better. And we're working on a deal now that 100% of the money invested will be matched against bonus first year depreciation. And then we give people, as co-investors in this deal, basically a royalty off of the deal. And it's in a $10 million a year operating business. And it's not available for people to invest in. So it's not a pitch for that. But we've been negotiating the terms of that deal for 9 months now. And we think, it's going well. And that kind of intent of adding value and wearing that on the sleeve, I think, is an important part of it as well. So people know what you stand for and know how you're trying to add value. So I'm glad that came up. So we've got 5 questions here from people watching. First question is for Natalia. What type of wellness companies have you invested in and been successful? And what market segment do they serve?
So we started looking into wellness industry this year, primarily with COVID and everybody sitting at home. We wanted to address the sedentary lifestyle and a lack of people to be able to go and conduct their daily routines, going to the gyms. So right now, I can't disclose the names, but I can tell you what they are, what type of business they are. So one of them is really top of the line pharma grade supplement company. And another one is a technology. It's a platform that helps people to put in their daily things and to get a daily workouts, nutrition, how you call it, lifestyles, what kind of vitamins they see. So it's kind of like a feedback. It's almost in combination with the medical remote monitoring, when you fit in, okay, what issues do you have, what symptoms do you have, but it's obviously non-doctor platform. It's totally wellness and lifestyle platform.
Great. Thank you. Appreciate you sharing that. Richard here has a question. What are examples of early stage or seed investments? How far along was the company in terms of market acceptance and technology development? I know Doug said it's all about the jockey, and you'll go super, super early when there's almost nothing to look at. So I think we have most of his answer there. I don't know if 1 or 2 other people want to comment on what early stage or seed means for you. Is it just someone with an idea, or do they need to have a working piece of software, a proof of concept, a customer or 2, and show it can actually work? Sure, go ahead, Carl.
Yeah, of the last 6 investments we've made, 2 of the businesses we co-founded ourselves, because we're not, we're a small unknown firm in Los Angeles in a space where there's hundreds of thousands of investors, and we don't see the best deals. So we see things that really need some love and care and attention, and we're not scared of sort of rolling up our sleeves. But in some cases, we're quite entrepreneurial ourselves, and we've started the businesses, brought in the management team, brought in the board, and that's been very successful for us because we just, we don't really look at other bankers' deals. It just doesn't work. It's too much baked in by the time we see it from a banker, and typically we'll see it from probably not the top bankers, right? So we won't see the best deals. Hence, we just have to be entrepreneurial ourselves and go after it. And of course, all the typical things going after, making sure that the team you either have in place or put in place is the right team. And if you put them in place, you obviously hope that it is. But also make sure that the opportunity you're developing has a real market. There's a real niche opportunity there that's not well established by someone else.
Sure. Great, thank you. We have another question here from Emmanuel for Carl. Does your interest in materials actually also include minerals, thinking mineral deposits? I think you did say you're looking at minerals, copper, gold. What other ones were you looking at?
Copper, gold, nickel, industrial minerals. We have a sort of broad thesis on infrastructure and hard assets and resources right now, because we think that, we can argue about inflation all day, but we think that there's going to be some devaluation of the USD, and we think that potentially inflation is coming into play. And, we think there's also some large infrastructure bills coming into play in both North America and Europe. We think that's the only way that we're going to get out of this mess. So resources is a very good place to be for that to benefit to that for where we see that going. So yes, gold is probably hard right now because the price has already gone up so much. A lot of the good projects are gone, but all the other metals and minerals.
Right. That's something very common I've seen among family office comments. What you just said is that family office, and what Bharat said earlier, that only distressed real estate. Very few family offices get excited by following the herd or just going after something because it's the hot thing everyone is talking about. They want to be invested in the thing, obviously, before it's the hot thing to talk about. And some people who I know who make 7 figures a year will say, oh, well, what should I be putting my money into? Maybe I'll get some single family rentals. And they say, is that what you're going to do, Richard? And I say, well, it just feels a bit dumb to do that because everybody does that, and there's no use of the unique abilities. There's no extra edge. There's no outsized return ROI based on my capabilities for doing that. I'm not a fix and flipper myself. So I think what you said is something I want people not to miss is if your deal looks like you're just chasing the herd, then you better point out the elephant in the room of why they should look into this, why they should respond to your email. And I see many people right now pitching deals, to Bharat's point, that's at the exact same price as it was before COVID. And there's more uncertainty. Even if there's not a major repricing, there's more risk feeling out there. And I see other people pitching deals and they don't even address whether their deal has been affected by COVID or not. It's the same pitch deck they had from January. And you at least have to address, hey, we're doing just as well, or we're doing better, or we got hurt, but now we're slowly ratcheting back. And here's our plan and our runway cash-wise. So I see all those things. It's pretty interesting. We have a question now from Christopher.
Make one comment.
Yeah, go ahead.
I mean, look, first of all, COVID is not going away. It's going to stay here for a long time. This is highly political. I'm just sharing my view here.
Sure.
Highly political at the moment. But if you speak to any medical expert, it's going to be COVID 21, 22, etc. This is a long-term thing. We have to adapt, and companies have to be resilient and adaptable to this current environment. This is not gone in September, October. So we're going to talk a lot in these sort of panels, and we just have to adapt and encourage all companies that are looking for funding to keep that in mind.
Right. Great, appreciate that. Christopher has another question. How should we approach family offices with a deal that is time sensitive and requires a fast decision? And he gave an example here, but there's many types of deals that are time sensitive and requires a fast decision. I think probably Christopher is asking this because sometimes I say, if you're raising $5,000 minimum at a time, people can move very quickly. But if you're trying to raise $10 million or $1 million and you're asking for a big check, people might need to get to know you over a little bit more time and vet you and get comfortable with who you are. And those things are correlated, not directly, but they're often, you know, the bigger check size, then the longer someone wants to get to know you before they pull the trigger. And that's why people will just see a one-page website and put $1,000 into a crowdfunding deal, and because they don't have a lot of downside risk. So if somebody does need to raise a sizable amount of capital fast, how should they approach family offices? And I know that Christopher has already heard, go to people you know, people already in your network, people that can give you referrals. So I think that is something that he probably knows. What else could he be doing that's not obvious, or that would just help him in getting traffic? It's only one at a time, please.
I don't know that's the problem, is that people want to do business with people they know and they trust. And I know if you'd asked me to do a deal like this 2 years ago, I would have said, we don't have the capacity. If you asked, if one of our portfolio companies came along to call us up that we'd invested in and said, hey, we need to do this now and we need to raise $10 million. It actually happened to me last week with one of our portfolio companies who were looking to raise $15 million. And we're working with them now with our network to just do that. But it's a company that we've known for 2 years. It's a CEO that we know well, that has had phenomenal performance. And we're able to introduce them to our members because there's that trust. But if it was somebody who just came in over the transom, it's like, sorry, we can't help you. And I just don't know a way to shortcut that.
Yeah, I think it's interesting, a couple of things you said. One, if Carl's right that COVID's here to stay, at least in some form, then if you don't have relationships now, you better be planting a lot of seeds, because a year and a half from now, you're still going to have no relationships if you don't start building that trust right now. So just because you don't have the relationships now doesn't mean you should just give up and say, oh, well, you know, no hope for us because we don't have those strong relationships. You better start them now, so later you're not in the same reality. So I think that's a really good point. But also I just want to add that investors all the time say they would rather see a short 2 to 10 minute video or 2 to 5 minute video of the founder articulating their strategy than seeing a 42-page pitch deck with some pretty HD images and their LinkedIn profile, because you can very quickly see in 1 minute of somebody talking whether they seem articulate, intelligent, well-versed, and expert. And when I studied psychology of influence, they showed that credibility was the combination of expertise and trust. And if you can show that expertise and add value first and show them that you're a credible person, you're long-term minded, that you're experienced, etc., I found that using video and doing that is one way to shortcut the process by adding thought leadership as how you build relationships, or just value first ideas and structures, etc. And we had a meeting last week with someone who's having a $100 million exit. I am opening up an office here in Scottsdale, and I went to get my car washed, and was able to connect with somebody at the car wash by chance who's having this big exit. And we showed them in a 20-minute meeting how they could give away 10% equity on their retail stores versus 23 or 33% they are now. And they said, well, I've never thought about that before, but that seems like something that we should be implementing or working. And that's how I shortcut the process, by trying to find something that is smart that's going on in the family office club and offering that to someone as kind of an olive branch to help them out in their situation. Like Doug was talking about, how are you empowering people or helping people? I think that's at the core of it, on how you serve investors. Anyone else want to comment on family office approaches before I move on to the last couple questions? We have a question from Chris here. What are the different rights that co-GP and institutional LPs have? So I think this could be a whole hour-long answer in itself. It could get very complicated, but at a high level, does anyone want to take a crack at the different rights for co-GP and institutional LP investors?
Yeah, I'll take that. Our structure is, as Richard, you know, is a public company structure. We have a public company in Israel, and we are floating a second one, hopefully in the next 60 days. And we have to have control. So co-GP, when somebody is going to put 95 to 100% of the money, to expect that they don't have any control or less control, it would be not possible. So control is totally given away when we come and invest.
Right, right. And there was a question brought about energy deals. Are you focused only in Texas, or are you open nationally to different types of deals and operators?
No, in fact, this company that we are co-GP with, we are going nationally with it, and it's not only solar, it's all other alternative energy. So we are open to any projects that fulfills that that mission.
Sure. And Christopher made a comment that the fact that there is no good answer to shortcut the family office process, was a helpful answer for him to hear. Like, it's just going to be challenging, and that's just kind of the fact of it. And that, it's always challenging, more challenging than people think it's going to be. But if you come to the live workshop on the 19th, it's free. If you're here, it's because you're a member already. There's no extra cost. We're going to talk about 35 different strategies to help you get more investor relationships. But it takes me 4 hours to say all that. So, please try to join that workshop if you could. We have a question from Sandy here. Anyone looking at senior living in this environment, or are people a little bit scared of that niche due to COVID, cross-infection, contamination issues within senior living?
In fact, we are doing a senior living, again, as a co-GP, but this is, again, a tax credit deal. So it's a low income, partially low income, but the tax credit itself pays off for all the investment that we make. So as we said, we've adapted our investment strategies to reduce the risk. One of my other friend, who is a multi-billionaire, he has acquired significant amount of senior living right now because the REITs and other people are under the water. So he is buying senior living for the pound for the weight of the bricks, and not at any other rate. So senior living has been hurt, from what I know, but deals are being made in a large proportions for the people who can afford to do those.
Right, right. Carl?
Yeah, and I mean, look, people aren't going to stop getting older, so senior living and it's going to be around. David, it's true. But so if the opportunity is unique and has some, has some aspects to it that takes into account where we are today, I think that's super interesting. And it's a space that, we're going to have to think more about because people are getting older and living longer. So. Right.
So residential assisted living has come up a few times lately in the Family Office Club, and I see that as a trend that's increasing and has even more strength during COVID too. So we just have 8 minutes left. Some of you I know have to go right at the end of the hour. So maybe just a quick 1 minute, any last comment, insight, or point you each wanted to get across, didn't have a chance to. Natalia, do you want to go first? Anything you'd like to end with?
Yeah, sure. To the Carl's point, I think that COVID is here, is going to stay, and unless families and people will really start believing it and changing the way you conduct the business, to transferring online, to family offices, it's all about personal, to switch over to different other means of communications, and to look for investments that support this new norm, support the anything to do with the internet providers, good internet in the places that you cannot reach to, healthcare, gaming, and also like what we do is we do also create companies as well, for Skins.jg, we're creating a platform that helps with the wellness of gamers and lifestyle, and the job portal and the job search, because we know the people we can bring through our existing networks. And sometimes that is an easier way to do it. And absolutely, to second your point, if you haven't started now is the time to start building those relationships on LinkedIn, on personal, sharing the videos, getting on Zooms, because they do take time to form. And we are in it for a long time.
Right. Yeah, for sure. They do take a long time to form. At one family office private dinner, at the event earlier that day, someone said, I don't do a deal with anybody I haven't known for a year.
Oh, yeah.
And they only did like larger size deals. But someone else said, well, my biggest deals, I've known the person for 6 to 9 years, and that's kind of depressing to say out loud, but the really big deals, they get done with people that I know really well. And I think it can sound scary to someone just getting started, but that, some people think that way, and they need to get to know people for a long time. Carl, any last comments?
Yeah, I mean, look, Natalia's comments are right, but let's also put in a positive spin to this, right? There's opportunities in this environment, and if I don't want to come across insensitive, but this shakeup has created it's created opportunities and also a chance to actually get deals done and get good things done that maybe it was hard to do pre-COVID. And it's created a correction or a disruption, and that as an investor is quite exciting too, right? So I encourage all entrepreneurs looking to raise capital to certainly not give up, and they have to pound the payment or the Zoom a lot harder, but don't give up. I mean, there's a lot of capital out there. There's a lot of there's a dollar for everything. So you might get 100 no's over Zoom, but that might be closer to the next yes. And so that's important to not get too discouraged as well.
Right, for sure. I've seen a lot of people raising more capital now than they did last year at this time, and some people doing extremely well. And so that's always encouraging to see. And if you're watching these discussion panels and you haven't been taking advantage of what else is in the portal and you haven't done your walkthrough with Jennifer yet, make sure you do that with her so you can take advantage of everything you're already paying for, honestly. Bharat, any last comments?
Sure. For investors, one has to be very careful. Don't think this is status quo. And just like Carl said, COVID is going to go away fairly soon. I'm a physician myself. I have a different view overall how this is being managed, et cetera, but where we are, it is not going to go away. So whether it's another 3 months or 6 months or when the vaccine comes, regardless of that there is going to be an impact of any investment that you do. So just be careful and take into consideration of the time lag and then the money that will be required for the businesses to stay in business before you start getting your returns. On the other side, on the business owners, my only recommendation is that if you have a business that requires cash to run, please reevaluate how many months can you stay in business in the same status quo as what you are today or the past 2 or 3 months with and without stimulus. I do believe that the stimulus will occur. I don't know what form it will occur, but reassessing your cash flow is probably the most important task every investor should forcefully do, and then make the prudent decision as to what are my options. I'd rather face the options today when I have $100 in the bank versus I face those options which are no options when I only have $1 in the bank. So that I've seen so many businesses come to me completely missing this point. As an entrepreneur, we all are positive thinkers, right? We always think everything is going to work out in my way, and sometimes it doesn't. And sometimes we have to be realistic. Being positive is a great thing, but unrealistic also affects significantly on our existence. So these are just a couple of cautionary remarks I have. And then besides that, I think United States will always be leader in the world. I believe huge in investments in this country. We had a big discussion this morning about, is it a time that the dollar is dropping? Should we even go or someplace else? Blah, blah, blah. But I would strongly still recommend, let us just stay in our country. This is probably the best country to invest in even today.
Great. Thank you, Brad. Agreed. David, any last comments?
Sorry, I lost my mouse there. Strangely, we're being affected by COVID like everybody, but what we are really seeing more than anything is the acceptance that we're in a global war for talent, even with COVID. And in organizations, enterprises that allow people to be their true authentic self and embrace diversity and inclusion fiscally outperform companies that don't. And this is research that has been long sought or seen by Harvard and McKinsey, and they've published numerous publications on this. And it seems to me that Silicon Valley and the venture capital firms are actually finally waking up to this. And we are finding, it's not all, we still come across VCs recently, one who turned around and said, yeah, we don't care about diversity and inclusion. And we're just kind of like, what planet are you on that you can actually say that? But the vast majority of the lead investors that we're working with are like, yeah, you got it right. This is a thing that matters to us. It's a thing that matters to the companies we work with, because they need to be competing to get the best staff they can possibly get. And that's really, I think, why we've seen ourselves literally grow 15x in the last 18 months in terms of dollars that our members are putting away. So that's the biggest thing we're seeing.
Great. Appreciate that. Doug, any last comments?
Yeah, I'd like to sing your praises here for a minute, Richard, because I think we've talked a lot about networks and the power of networks. And there's a phrase in our little world that your mind is like a parachute. It's really better open when you need it. And the fact is, I think these networks you have to expand. You have to learn more. I'll give you a good example. We had one of our entrepreneurs called up not recently, or very recently, and said, hey, I'm being pursued by these guys from a SPAC. Okay, what's your question? What's a SPAC? So the first thing you have to do is you have to go to your network to bring that expertise. And that's not an easy thing to do, because those issues and questions will always be different from tomorrow than they are today.